Hey, hi guys. Um, Good morning. Patrick here. I'm from SynergyPlanners, and I'm bringing you some updates with regards to the market, with regards to your funds and the performance, and our advice moving forward. So let's get started. This is a short disclaimer which we need to show you when we do any of these recordings or any of our updates. Now, we've got great news and fantastic news. The year-end market outlook, finally a light at the end of the tunnel. For those of you who have been following our previous updates, you know that we've been giving you periodic updates when there's something significant that needs your attention. So throughout pandemic, especially, we've been giving you updates, and now it's a very important update that we're giving you regarding the possible market movement towards 2023. We've been monitoring fund movements because of the volatility in the market. And some of you already know this because you've been following your fund performances on the RHB app, on your EPF app, and we've been having meetings with you as well. So, 3-month charts, the way to go forward so that we can see some consistency, we can reduce the noise in the market, we can also actually look at the reduced volatility. So here's a 3 months chart that shows the bottoming out of the fund performances. You can see clearly here, as in September, the markets have come down, and in October, it started to come back up, especially for the China fund, the regional funds, and especially Malaysian fund. So these are the ones that we are wanting to highlight to you. Now, what has been happening in China? The China turnaround has actually started after Xi Jinping concluded his Politburo revamp. China has some significant upward movements in their market, which is very, very good for investors. You can see on the right here, it says China's shares in Hong Kong went up by 17% in the past 2 weeks. This is from early November. So this is because China has actually done some important policy shifts in uh, in their property sector and also in the zero COVID policy that they've had. So they've reduced the requirements for home buyers for down payments. It gives developers a little bit more liquidity as well because they get more buyers for the property sector. And at the same time, the COVID policy, they've loosened out the requirements, shorter quarantine time, they cancel the circuit breaker mechanism, very important. And at the same time, home quarantine is now in place instead of a centralized facility. And importantly, because there's so many elderly in China, they've actually started boosting the vaccination rates among the elderly in China. So all of these updates actually come from Bloomberg, and it actually has given good turnaround for our Big Cap China Enterprise Fund. Now, in other sectors, you can see S&P 500 also has recorded good movement upwards. Our global equity fund has started to pick up. So has our Islamic Global Developed Markets Fund. They've started the pickup movement. Bloomberg actually records global stocks having a positive closing, a possible year-end rally. And historically, you can see the MSCI has posted 4 quarter gains in the usually about 4.1% or so in the last 20 years. So only 3 times that actually is declined. So we are looking at high probability of a year-end market rally. This is from Market Insider, where FundStrat actually looks at a 15% rally. That's very optimistic, but not entirely unreachable. So we are looking at a good Christmas, fingers crossed. Now, in the local front, this actually is fresh from the press. The article has been taken out actually this morning. So the GDP last two, you can see in 2022 second quarter, the GDP actually went up, uh, and it's actually at 8.9%, a very solid figure for recovery. Yeah? And that is because of the markets opening up post-pandemic. But very importantly is this article that I picked up this morning, which shows the KLCI yesterday breaching 1500 upon the news of our new Prime Minister and the swearing in of our new Prime Minister. Now, importantly is the foreign investors are the one that snapped up, okay, the markets yesterday. So they have started to come back in. This is very indicative that it is not just locally controlled or manipulated, that foreign investors are starting to come back in. So this is important because it actually signals the bottoming out of the market. Now, we don't want to buy when the markets have already recovered. We want to buy when it is cheap. So this is very important. Valuations are very attractive right now. If you look at this report from Morningstar, the blue sectors across the world are the undervalued markets. And these are the markets which are prime for investing. So you can see Malaysia is right there, China is right there. You've also got Brazil and Europe. So these are markets in which we are getting our clients to come in to take position and to take advantage of the upward trend coming up. So what we have done is we've actually prepared three portfolios. A play it safe portfolio, which has got 10% global exposure, and then the rest in ASEAN, in China, Japan, and in Malaysia, with a 60-40 spread. So 60% in equity, 40% in fixed income. And of course, we've got a moderate portfolio with a 70-30 spread without the global exposure. And we've got the opportunistic um, spread, which is in ASEAN, in China, and in Malaysia, with an 80-20% spread. So we've got these three portfolios specially made for clients who wish to start a plan on savings in unit trusts and also are ready to take advantage of this upward turn. This is the back testing of that portfolio. It shows the previous downs, but you can see towards the end here, the portfolio has actually started to turn around. So the best time to buy is when? The best time to buy is now. If you're waiting for the right time, this is the right time. Please take note that the first telephone number here is mine. We would like you to save both these numbers on your phone so that we can send you WhatsApp updates. Okay, so please save both these numbers. Thank you very much and happy investing.